Hello and welcome to the Wendell Effect. My name is Brandon Wendell. I apologize for no camera again today. I'm actually just getting over COVID and I'm a little worse for the wear, but we'll get there. Anyway, I want to welcome you and thank you for being here with me. Got a couple pictures of me anyway from better times. Just want to remind everybody that we are not registered broker dealers or investment advisors. This is educational and informational information that we're putting out there, and just doing that for those purposes only, not trying to tailor anything towards any particular individual or recommend any particular securities purchase or sale. Keep in mind there's always market risk. No matter what you do, you can't eliminate that risk, so make sure you don't ever invest or trade with any money you cannot afford to lose. And past performance is not indicative of future results, so there's never any guarantees here, or really with anything in life when it comes to it. So we are also not subject to trading restrictions, so we can have a position in a security or initiate one at any time. So that being said, if you want to stay in touch with us or give us some feedback, you can email me at the Wendell Effect at tradingmindsetassociation.com. And you can also catch me on Twitter at TraderBDub. That's pretty easy to catch me there almost every single day. And you can also search for us on YouTube. Probably already found us, obviously, if you're watching this, at the Wendell Effect. So again, I want to thank you for being here, and we're going to kick this off. The schedule for today, going to start off with our normal analysis. I'm going to start off with the weekly market analysis on the equity index futures for this week. Then we're going to move into energy futures, take a look at those and see how they're preparing for the week coming. Then I'm going to go into sector analysis and identify which sectors are moving, which way they might be moving, how to take advantage of that, either from the sector analysis itself or even going down to individual stocks that might outperform or underperform depending on which way the market's moving. And then we're going to take a look at Indian markets, and I'll pretty much do the same thing. I have a couple of things I'm looking at for individual securities, some securities we looked at previously. We'll do some follow-up. And then we're just going to take a quick peek at Bitcoin. Just we're still in that crypto winter, if you will, and it doesn't look like it's ready to end quite yet. So there's not a whole lot to talk about there, but we'll just take a quick peek, see if there's anything that's surprising. So starting off, we're going to look, and that is the wrong week. I need to change that. That should be the 17th. There we go. So, whoops, chalk that up to the COVID mind. Anyway, so the week of the 17th is this week. And on the ES weekly chart, we had a positive divergence, as you can see. I had it marked off for the past couple of weeks, but really all it led to was a sideways movement. I was saying that in order to actually get a reversal in the trend, we need to put in a market bottom after that divergence. So we need to have a little bit of a rally. We put in a second bottom where the RSI doesn't go below 40. We haven't had that yet, so we'll see what happens kicking off this week. So far, the last 3 weeks have been somewhat bullish, albeit sideways, where you're seeing these bottom tails on those candles. That's bullish pressure trying to push prices back upwards. So we'll see if that wins out and we can make some new highs. Each week we were making lower highs. So that's actually suggesting the prices want to go down, even though we're fighting to stay up. Dropping down to the daily chart, we're actually still in a downtrend. And I say that because we have lower highs followed by lower lows. So we need to break this high, which would be, I guess, the 10th. Whatever the high that was, a little over 3,900. And if we can break that high, then we break that downtrend. But it's a very weak trend, so it could snap pretty easily, to be honest with you. In order to be able to be in an uptrend, we'd still have to have a higher high after a higher low. We haven't made a higher low yet. We just have this current low right there that we're keeping an eye out for. So we'll just see. We could just be stuck sideways for a little while here. Going into the 4-hour chart, we saw a dip below 40 on the RSI, showing some weakness. Put in a little bit of demand here, right at about 3,800 levels. You can see 38.70 and a quarter. 37.80 and a quarter to 38.06. And as of right now, if we rally, we might be able to make some new highs, but we're going to run into just above 4,000, a little bit of supply if we do make it up there. We might end up stalling out because, again, we're just kind of caught in a sideways range here. That's between that 39.50 and 37.50. It's about a 200-point range that we've been in pretty much for this entire month. So we'll see if we're able to get out of that or if we're going to be stuck for a while. It kind of looks like we're going to be stuck for a bit. Look at the NASDAQ, same picture. You saw that after the positive divergence, I still have marked there. Pretty much haven't gone anywhere. We haven't been able to make a new high. We've been making lower highs every week. Didn't make lower lows, though, like we did in the other market, the ES. So we're making higher lows and lower highs. We are just sideways. On the daily chart, it's a slight, no, that's not even an uptrend because we have lower highs, but we have higher lows. So we have nothing. We got no trend. we're just going sideways and consolidating. So it doesn't really seem like there's a spark to kind of kick us off in either direction. Going down to the 4-hour chart, this is kind of interesting. This is called a hidden divergence. I marked this off last week. I think we saw that there was a low slightly above 40, so we were able to break to a new high. But now what happened, look at this, we came back and went below 40. Well, when you move from below 40, typically you do not make new highs without a correction first. So this could have been the correction we needed, but what I want to talk about is with this hidden divergence. You can see that prices were making a higher low, yet the momentum showed that we had more bearish momentum. So that usually acts like a springboard for price when that happens, where if you have more bearish momentum like this, you should have had a lower low in price. The fact that you had more bearish momentum but the bulls held on, that allows prices to spring freely to the upside and suggests that we might actually go up and test that 12,310 this week. So we could get a false breakout. I'm not saying it's going to be a legitimate breakout of the sideways basing we've been in for the month, but it could be a nice little kind of a trap, honestly, a bull trap, catching people as we break it out above that 12,200, running into that supply zone, giving you an opportunity to go for the short, possibly all the way back down to the bottom of the range of 11,365. So it's kind of what this is setting up to be, kind of a trap. Again, don't get suckered in buying the breakout here of these highs. Look, because there's supply above for a possible short of that supply. On the Dow, again, same thing. We can see that we haven't been making new highs since the divergence, lower highs, and this time lower lows on the Dow. So a little bit weaker than we saw on the NASDAQ. Going to the daily chart, we just have no momentum. We're moving sideways, as you can see. Technically downtrend, lower highs and lower lows. Going down to the 4-hour chart, well, nothing here really. We don't see any kind of divergence or anything happening like we saw in the NASDAQ. That was the only one that showed that hidden divergence, I believe. And, we started to move off the lows from below 40, so we should stall out pretty soon. If the NASDAQ breaks out, it could carry things a little bit higher, maybe up to 32,222 supply zone overhead, but I just don't see the Dow making it there. It looks a little bit weak this week, so keep an eye out for that. And then the Russell, finally, same thing, lower highs every week, same lows for the most part, so just kind of weak altogether, still just trapped sideways. Lower highs, but same lows, so no trend there either on the daily time frame. And if I go down to the 4-hour chart, you can see that consolidation. I drew the line on the bottom, and really the supply is the upper level, that 1793, and we're just kind of stuck. With the other markets rallied already and went above 60, the Russell's showing a lot more weakness. It actually reminds me of something. Actually, hang on a second. I have too many things open here. I wanted to go back a moment and see. We started this move down from, actually, I'm just going to go to a live chart. That's what I really wanted to do anyway. So here we are. I'm going to go to the Russell. And we'll go out to the daily time frame. There we are. And you can see again, I wanted to see where this move down began. It was really on the 7th. And so far, we've been sideways, like I said, pretty much from the 16th. So the reason why I'm wanting to see that is I want to see who's actually leading us. And here I have all of the 4 markets together. And I can get an idea if I take it to a daily time frame, which I am on, and figure out, okay, which market is leading us either up or down, or in this case, sideways, really. So again, we go back to, I think it was the 16th, if I wasn't mistaken. Let me make sure of that. And we bottomed out on June 16th, and the top of that move down was the 7th of June. So take a look at both of those. So June 7th, if I go back, there we are. It's pretty obvious, you can see. And if we start the study from that point, our leader to the downside has been the Russell. That's been the weakest market. And the leader to the upside has been the NASDAQ, which I'm not really surprised. That's what I was suggesting. The NASDAQ was a little bit stronger, while the Russell has been a bit weaker. So if you want to know where the market's going to top out, you should look to see the supply zones on the NASDAQ. If you want to know where the market's going to bottom out, however, you should be looking at the Russell. And if you take this all the way back to the beginning of the year, you can see which market has been leading us in, there we go, right here. So far for the year, you can see the NASDAQ is actually overall the weakest market, but not recently. Okay, for the past couple of weeks, it's been the Russell. Okay, but overall, still pretty bearish. We're out of bearish territory, I suppose, from the highs on the Dow and the S&P. We're not too far off. So now let's take this to where I showed you the 16th. There we go, and we'll zoom in a little bit more so we can get a better study there. There it is. And I did a video on this a while back called Follow the Leader. I'll probably do another chart school video on that very, very soon, kind of update it for you guys. But you can see in this sideways motion, again, the NASDAQ is still the leader to the upside. However, the Dow is showing a lot of weakness now. So that's kind of what I was hinting at. Again, you want to follow the leader. If the markets are going to move up a little bit this week, watch the NASDAQ to see how much it's going to move off those lows and when the turning point is going to occur. And if you're looking for the downside movement, it's probably the Dow or the Russell that's going to be leading us. So that's what we want to pay attention to there. And yeah, that's about it on those equity markets for this week. So moving on, and again, I got the wrong date there. Forgot to change that over. There we are. Energy markets for the week of the 17th of July. Starting off on crude oil, we pulled back quite a bit. And it looks like we may be coming down. I don't know. This is really a demand zone because a little bit of basing and rally, but it's not there's no follow through there. So if we are going to bounce, it'll be close to that 83 area. And you can see bottom tails on some of these candles. The real test will be if we go below 40. If you look back on the weekly chart, we haven't been below 40 in a long time. So that's bearish territory. By the way, I'm looking at the September contract. The reason why, we're going to be rolling over very, very soon. We usually roll between the 19th and the 22nd of the month. So we should be rolling over this week, especially before the end of the week, into the September contract from August. So be careful of that with the energy markets. They are going to be rolling over. So anyway, looking at the daily chart, you can see we actually had a positive divergence at a little bit of demand here. We had drop, base, and rally. The question is, are we really going to be able to get much out of this rally? Because we are seeing a positive divergence, we should pop a little bit to the upside. The problem is we're still in a downtrend here, and that divergence occurred while the RSI was below 40. When that happens, typically you do not make new highs. So I would say the top is going to be right around 100 on this bounce. So we might be able to throw a Fibonacci retracement to see where we're going to top out, or even look for supply on these lower time frames. You can see right here, excuse me, bear with me. As I said, still recovering here, so some voice issues. But you can see we had a retracement of 61.8%. Now we're impulsing down. We may be done with our retracement, and it's not quite the same. We're only going at about 50%. Since we're getting less retracement, there could be some more momentum building up. I don't think that daily demand is going to hold. Okay, what I'm saying is I think we might be done with the pullback right now and getting ready to drop again. We couldn't even really hold above 50 on this pullback for momentum. So this is suggesting we might see more bearish opportunities this week. And going back to the daily chart, we didn't really have any demand. I think we could push down to 83. We'll probably see 83 sometime this week with the bearishness in crude oil. You take a look at West Texas Intermediate. I've shown you this before. The seasonal move right now is very, very bearish. You can see from the 13th of July when I did this last week to August 20th, 60% of the time the market moves to the downside. It's pretty bearish. So we're right in line with what we should be expecting with the seasonal move for that particular security. So this is not really much of a surprise. Focus more on the short opportunities. Hold them as long as you possibly can. Looking at Nat Gas, it's a different picture here. Nat Gas looks like it came close to this demand at 5.125 on the weekly. Couldn't quite hit it. Couldn't go into bearish territory momentum either. And we're getting a little bit of a hook here and a pop to the upside over last week. Now, that may be done. Watch to see as we come into the supply zone right here at 7.259 if we can get above 60 on the RSI. If we get above 60, we'll go through that, maybe even test this area around the 8.5, 8.7 area for supply. So we'll just have to see as prices come up into that supply if we're going to be able to have the momentum to get through. If it stays below 60, then we'll hold that supply and push back down to test 5.082. On the 4-hour time frame, not really seeing much here. Still pretty bullish. There's nothing else to hold us down on the 4-hour. What do we have? The supply is 7.259. Seeing a little bit of selling pressure right in that area on the lower time frame, but not a good supply zone to kind of fine tune. Well, I suppose we could drop, base, 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 and drop. I probably could have marked that off as a supply zone right there. And look at that. Yeah, pretty much same area as the daily. So look for that, and then you have a possible target at 5.5 right here, and then the 5.082. So nat gas is looking like it might stall and push to the downside this week as well after a small rally. Looking at the weekly for gasoline, wouldn't that be nice if that goes down too? Well, it looks as like we've eaten through most of this demand here, and it may try to push down to the next level demand, 2.63. So I know everybody, paying too much at the pump would love to see that happen. So taking a look down on the daily time frame, you can see we had a little bit of positive divergence, which has slowed our move through the demand zone, suggesting we might get a little bit of a push up. This is actually a small bullish harami here, where you have a small candle inside the larger. Not the best signal. It needs to confirm by breaking above the high of the first candle, the larger one here. So if we break the high of that, then yeah, we'll get a little pullback, but we're probably not going to get above this high before we drop down. So again, looking for shorting opportunities. Well, we've got about a 38% retracement. Our previous move was 50% retracement. So we had impulse down, retrace 50%. This is actually a 61.8% extension. I didn't draw it out, but that's what it is of the previous impulse. So we're getting a little bit weaker on our moves down, but we're also getting weaker on our retracement. If this holds at 38%, we could open up the week. There's lots of selling pressure here to just turn around and continue to head down. So if that happens, just look out below. We should be able to push, like I said, down towards that 2.6 that we have for our next level of demand. Heating oil also came through and ate up most of this demand, but you can see how much bullish pressure we had. So it's going to take a lot to turn this around. We could possibly move a bit sideways here. Going into the heating oil daily chart, you can see we're trying to put in a low above 40, but that doesn't mean we're going to go up very far because we have overhead supply right in the way. So we could just get sandwiched between that bullish pressure below 3.3 and the selling pressure here at 3 3/4, kind of put us a bit sideways for the week. So that's kind of what I'm seeing so far on heating oil. And not really much help here on the smaller time frame. We're pretty much lost all of our momentum, moving a bit sideways as well. And yeah, that's all I've got going on so far. Anyway, that's what I see on heating oil. That's going to take us through the energy markets. We're going to move now into the stock market analysis and take a look, see what's going on with the sector performance. And I actually had the right week showing there, the 17th. What do you know? So looking at the performance for the past 6 months here, you can see I've got it set for 125 days. It's trading days. And looking at the last 6 months, we are clearly in defensive mode. So typically the sectors that perform best when the market is diving are usually the staples, healthcare, and utilities. So we still have the inflation effect here on the energy. But other than that, I mean, you take out the S&P, this is how they're performing individually, not against the S&P. Everything's down, but utilities. So overall, there's still the flight to safety going on. Let's drop this down to, let's see, so from the last 6 months to the last month, and you can see the same picture going on here. Again, for the last month, the money's been flowing into the safeties with a little bit of real estate for some reason. I'm not sure what's going on there, and a little bit of tech, but not much. But clearly the leader, healthcare, staples, and utilities are what you expect when people are expecting the market to continue to push to the downside and recession to set in pretty soon. Usually this is going to be leading the recession by about 6 to 8 months. That's the announcement, not really when it hits, by the way. So it's a little bit technical there, but I'll go into that another time. And looking at the last week, we could see same thing. Really not much has changed other than, pretty much everything's down except for the staples. Again, flight to safety is what we're seeing going on right now. So taking a look at what's happened for the past week, this is kind of our map of the market. It's kind of mixed, nothing really standing out, very positive. A little bit here, people using their credit, I suppose. You got Citigroup, Visa, MasterCard, Discover Financial. That was one of my long opportunities I was putting out there. Google's dropping, Alphabet, Microsoft, Meta. So nothing really, kind of standing out. Boeing is the shining star, it looks like right there. It's kind of interesting. I didn't see that. Anyway, looking at the staples, we are just stuck sideways. I mean, this is honestly the least sucky out of all the sectors. Doesn't mean it wants to go up. It's just kind of going sideways. And we're just stuck along that supply zone. The longer we go sideways, though, the more likely we are to push to the upside. So we'll see if we can break out and possibly move up to 75.99. There's not really an opportunity here that I'm looking at. With healthcare, I was expecting, I had these pink lines drawn. If you look at our video from last week, I was actually suggesting that the market was going to drop. We had a little bit of divergence. Notice where prices made new highs, indicator did not. It made lower high. So we see the drop, but it retested before it's dropping. So I still see us getting ready to move to the downside on healthcare, even though it performed pretty well last week. I think that's just a shot in the dark, and I don't think it's going to last long term. We are going to start turning to the downside and probably see us move towards that 119 within the next couple weeks. It won't happen this week, but I do see us starting to cool off, maybe go a little sideways before we roll over. And let's see, XLV, this is still, wait a minute, what was I looking at there? Oh, this was the 4 hour, not the daily. I apologize. So that's the 4 hour chart, looking in more detail on the daily. Again, you can see we're at a daily supply zone here, 130. So that's suggesting we're not going to be able to keep going higher because we don't have enough momentum. So we're either going to move sideways or start to drift downwards. The utilities, which was also one of the bullish sectors, really just kind of went sideways this week. You can see over the last couple days, our last 5 trading days, it's really just sideways. Even though they're all green, we gapped down and then rallied. So it's kind of like a daily intraday trade opportunity. Sorry about that, Lucy's barking. And all sorts of things happening today. Anyway, so really nothing great as far as opportunities there. Let's take a look at what we were talking about in the past. One of the follows we have is Costco. Hopefully you're able to take advantage of that long we had going back in, I think it was the end of June right there. You can see it was talking about going long. And right now, this is still performing very, very well. So move your stops up. At the very least, put your stops somewhere around 490, right underneath this red candle, because that's your next level of demand. If we do pull back, we could possibly bounce there. It might be a new opportunity to re-engage, honestly. And still waiting to get to the target. I want to get out before the 554. I would exit about 548, 549. That's the target. And we're well on our way. So make sure you got some sort of trailing stop set up on that. Also on EW Edwards Life Sciences, unfortunately, this was doing really well, made it almost halfway to the target and then pulled back again for another bounce. So now that we've bounced, it looks like we've made a new high, but we don't really have a lot of momentum. So you may need to pull the plug on this one pretty soon. I would say move the stop up just underneath this green candle, whatever that previous 4 hour low was, going back to last week, because I don't know if we're going to make it to the target, and I hate to see you give back too much profit. So put it in a tighter trailing stop on this. It looks like the trade is getting a little weak. Also, Discover Financial, I mentioned that. This one's been a really good winner. You see it try to pull back towards the stop loss, never hit it, and it's almost at target right now. We have plenty of momentum. I don't see any problem hitting the target this week. So just hang on if you're still in it. But again, move your stop loss up right around 102.50, maybe a little underneath that 102.45, 102.47, and just be prepared to get out if need be. But for the most part, DFS should run up to the target of 106.29. And finally, NEE on the 4 hour chart. This one is still moving, and it does not have momentum. You can see we made a new high, but I don't think this is going to hold. So make sure you move your stop up as well. Maybe put it at about 79, I think it's like 79.40 right in here underneath this green candle, just to make sure you don't give back everything. Because with the lack of momentum here, as we made a new high, that's a little disturbing, and we could get a pullback again. So you don't want to give back what you've been earning on that. Anyway, let's see. Oh, you know what? I'm sorry. That was the past. Okay, so that was the warning I should have given, apparently. I'm sorry, I forgot that it actually did pull back. So this one, unfortunately, stopped you out if you did that. I forgot to talk about that, but that was last week. So this is what actually happened. It has pulled back, so you would have been stopped out if you were in that one. So it was a winner, but as I was saying, hey, I saw there's some weakness there. You can even see the divergence I drew, and unfortunately stopped you out. I didn't realize that this had already showed from the next week here. Did give us a bounce on the lower demand zone, but I'm not really interested in taking a second shot at this. Anyway, looking at the overall sectors for the ETFs, just kind of following up on what I did last week, you can see on the XLY, consumer discretionary, normally very bearish this time of year. We've been consolidating, and if the market starts to drop as a whole, I think this will drop very, very fast down towards that 94.05 area. So I haven't given up on this. We're consolidating. We're at the top of the trend line. There may be an opportunity to sell this ETF. Maybe put a stop, one ATR above that use the daily ATR, whatever that is, right above, and then target that 94.05 because we're right at that trend line, the top of that trend line downtrend. You're just shorting a trend line. So there might be an opportunity there. Additionally, inside that sector, there are some stocks that are going to be performing pretty well to the downside. As a matter of fact, Wynn Resorts, you take a look at this, and from the 18th of July until August 3rd, 100% of the time it dropped. There isn't a single winner there. Every single year, well, it's only been the last 5 years, but it's been a 10% average return. So Wynn usually drops 10% during this next couple weeks here. So something to take a look at. And looking at Wynn, we are also right at the top of a trend line. Notice we've had 1, 2, we're trying to make our third touch. And if you do, that'll give you that opportunity to go short on the daily chart with the targets potentially being, 42, 45. That would be my first target down there. So I put my stop 1 ATR above. The ATR is about 3 points. So if you end up shorting around 55.47, your stop would be at about 58.47 or 58.50 really is where you could put it. And then again, target that 42.45. Looking at the XLC daily chart, that's communication sector. You can see it's been consolidating a little bit and just kind of bouncing off the demand, but hasn't really broken out that consolidation. Looks like we're going to continue to push through down to the 50-55 pretty soon. So we're not quite on the trend line, but same sort of thing. If you want to try to short the trend line, this is a sector that usually performs pretty poorly when the broad market is dropping as well. So looking a little deeper, Netflix is one of the stocks in that sector. It usually drops 90% of the time from July 18th to August 2nd. Over the last 10 years, Netflix has dropped on average 7%. That's an annualized return of 83.59%. So looking for a short opportunity here on Netflix. Well, Netflix is into a supply zone that's already been to before. The origin of supply was back here. You can see we rallied up, made a new low, rallying up. It'll be interesting to see if we make a new high, because normally when I see that the zone has been penetrated that deeply, I don't really like to touch it. I'm going to be waiting for this one, to be honest with you. I won't touch this until it hits this area and shows me weakness inside that area between 190.17 and 192.03, perhaps shorting as it leaves that 190.17 to the downside. Problem is, we might be above 40 or 60 on the RSI, so it's very difficult to kind of call this one. But historically, it's very, very true. It usually drops for the next couple weeks here, so we should see a drop from this area down to at least 175.56, if not to new lows. Omicron Group is also another big loser, if you will, or winner if you're willing to short. You can see it normally drops 90% of the time over the last 10 years. Average return about 2.5% to the downside. So looking at Omicron, OMC, you can see we're really just sideways. So what we have to wait for here is a break out of that sideways range, looking for it to break down 62.03. Or if you want to be ultra conservative, wait for it to close below the 62.03, then retest it as an area of supply before shorting. You got the Fibonacci extensions 57.39 and 52.18 as a couple different targets there on the downside. XLK going in the technology sector, also consolidating, but trying to break to the upside. I don't think it's going to get a lot of momentum. It looks like we're going to break and just go sideways rather than up. Again, we've got no momentum really going anywhere for this sector. Same thing with industrials. I don't have any trade opportunities in that sector as well, but you can see we got a little bit of divergence here. We have lower lows in the price, but higher lows on the indicator. So there is a little bit of underlying strength, really just going to kind of hold us sideways on the industrials. Going into building materials, XLB, we are still consolidating and moving to the downside. We do have, again, a little bit of consolidation and a little bit of weakness on the downward momentum. Should be seeing this RSI a little lower, but because we're consolidating, that's why it's going a little more sideways than down. There's really just no opportunity here, so I'm just going to skip it. The energy market, XLE, that one had been a hot sector, but is now finally falling off. We'd had a positive divergence here where prices made the lower low, but the indicator made the higher lows. However, the follow through, we went back below 40. The trend is not done. We are still going to head down south towards that 62.17. Should hit that before the end of the week. So I'm expecting this to continue to move downwards. Remember, we saw the energy futures also looking pretty bearish as well. Anyway, if you're looking at an opportunity here, you can see from the 18th of July to 17th of August for about a month, the Apache Corporation has a pretty good shorting opportunity. Now, it's not the best winner, but it's over 70%. Excuse me, and that's going over the last 15 years. Really, it picks up a little bit towards the end of July and then drops into mid-August. But overall, pretty good drop here, 3.5% roughly to the downside over the last 15 years. So looking at Apache, we do have a supply zone overhead. This is on a 60-minute chart. We have rally, base, and then the gap down. So it looks like we might try to close the gap at 32.90 before dropping, with the target being 29.74 and then 27.78. So put the stop just above maybe 33.59 to 33.55. Going over to the financials, this one we actually did break. I remember I drew out this last week saying that we had this move into this sideways triangle, and I thought we were going to break, possibly retest, and then continue down. That's exactly what we've done. We've broken the triangle to the downside, but instead of going straight down, we've retested it. And that's usually why I don't necessarily short right away. I wait for the retest before shorting. So there may be an opportunity beginning of this week on XLF to short on this retest using 1 ATR as your stop loss, targeting the 29.37, then ultimately 27.39. One of the weak stocks in that sector, if we do happen to climb a little bit more, this is on a 1-hour chart, 60-minute. This is Travelers, the Traveler company. So we're just kind of moving sideways. You could possibly even short the breakdown to the fresh lows, or if we do get a rally, this would be the better area. It's a drop, base, drop, supply zone at 163.26. Place to stop at about 165.14 or 15, and then target 152.37, 145.64. So pretty straightforward on that. And finally, the real estate sector just really consolidating and moving down in a channel. We had a positive divergence. We are trying to hold above 40, so this might suggest we're going to go sideways rather than moving down still. I didn't really see any great trade opportunities for it, though, so I'm just going to pass. Anyway, that's about it for the equity markets on the U.S. So I'm going to shift over to the equity markets in India for the week of July 17th. And looking at the Nifty weekly, we are still pushing down in a bearish trend. Can't make higher highs. We're just moving down here. The momentum is still strong to the downside, and it looks like we're going to get to that 15,000 eventually. I don't see anything holding us from that area. Looking at the Nifty daily, we have done a bit of a retracement. I think this was a 61.8% retracement. So now we're continuing to move down. Our next target is 15,280. And then, of course, that 15,000 level on the weekly demand, possibly even deeper into the 14,665. But you can see when we retrace, we couldn't get above 60. That's very, very bearish. In the 4-hour chart, we got a weird little uptrend going right now, but we'll test that. And if we break this trend line, watch for it to be retested before a big drop. And that may be a short opportunity for the Nifty. Now, if I break this down and look at the components, you can see that for the past week, we had the technology services really bearish. We also had a little bit of non-energy minerals that were pretty bearish. And the banking industry was very, very weak as well. And of course, Reliance just a little bit sideways, and that didn't really help much. So it was offset by some smaller sectors that were trying to be a bit bullish. That's why we didn't go down as fast as we could have with a lot of the red that you're seeing here. Anyway, looking at the 4-hour chart on Reliance, we couldn't get into bullish territory as we rallied up here. And right now we're just moving sideways, but the longer you move sideways, the more likely we are to drop instead of rally. So I think we're going to head down here going into this week. TCS is kind of interesting, though. Remember, this was one of the weaker stocks. You see how badly it performed this past week. And, well, this is a 4-hour chart, but even still, got a huge divergence. So that's suggesting we could get a little choppy here in the Nifty because we're not getting clear signals to the downside on all the stocks. Reliance is showing you sideways motion. TCS is suggesting we might calm down in the drop and maybe move a little sideways here with this divergence. And Infosys doesn't really have much of a signal either. This was also one of the leaders to the downside. We see on the daily chart, and for last week, this was very bearish. But all it really did was kind of go to the bottom of the range and starting to flatten out as we're approaching the bottom of the range at 1400. Looks like we're stuck between 14 and 1500. So look for a possible bouncing back and forth that leads to sideways movement again in the Nifty. Could be a little tight, maybe much easier to day trade than it would be to swing trade the Nifty this week. HDFC also showing a little bit of strength. We had it bottoming out here below 40. You see, we couldn't make a new high. We pulled back, not below 40, sprung up to a new high. Well, guess what? We've just pulled back here, and if this holds, we should be able to make a new high this week, possibly touching that 1440. And this is on the daily chart of HDFC Bank. So that could hold up, again, a little bit of positiveness to the Nifty and even the Bank Nifty. So a couple of trade opportunities we were looking at before. This is satin on the daily chart. You can see that really hasn't gone anywhere from that supply zone. Supply held, as I expected it to, but unfortunately, we've just gone sideways, not really getting the momentum we need to go to the downside. Might have to get out of this for whatever small profit you have here, unfortunately. And Pokarna was unfortunately a failure. One of my rules typically, well, this would have just been a loss. But one of my rules is if we are above 60 on the RSI, I cannot short. Unfortunately, we hit the supply zone here when we were still below 60. So unfortunately, this was a loser. Anyway, moving on to the Bank Nifty, you can see a consolidation still. Nothing's really changed over the past week. All we did was bounce off the bottom of the consolidation and move halfway up. So we don't really have much momentum in either direction. You're best looking elsewhere or day trading, looking for smaller opportunities rather than try to hold on a swing trade here. And on the daily chart, again, I don't really have much to tell you. We did peak a little bit above 60 here on the RSI, so that's suggesting we will not go below. As a matter of fact, we might actually, no, it's not a good demand, never mind. We might hold this area as demand though, right around that 33,500. If we try to move down, we could bounce off that area. And the reason why is because we got too much bullish momentum to make new lows. So I suggest that. Let me just take a look real quick. About to live charts here. Again, I apologize for my voice. I mentioned I'm overcoming COVID. Here we go. And as I was saying, if I go into the daily chart here, yeah, the demand that I see is really right here on the daily time frame. And it doesn't really qualify, actually. I thought there might have been something there, but there is not. Let's try down the 4-hour chart. On the 4-hour chart, the nearest thing we have, it looks like, is right here. Rally, base, and rally. So we might start to flatten out in that area again because we got some bullish pressure coming in. And if we do bounce, we could see some new highs this week on the Bank Nifty. Remember, HDFC Bank was a little bit bullish, and I have to take a look, but honestly, my target would just be this trend line. So we're looking at maybe moving up kind of the same angle of attack as we did before, puts us somewhere in the neighborhood of 36,677 if we bounce off this demand zone, depending on where we come into it. So watch for that for this week on the Bank Nifty. That's all I've got on the 4-hour time frame. Yep, and that's exactly what I was looking at, that 34,385, 34,150, as I mentioned, about that 36,600 area. So I said I was going to do a little bit of crypto analysis again. I don't think crypto winter is over. You can see on Bitcoin Weekly, we have come down and just been basing at this 19,440 area, just back and forth and back and forth. That's 4 weeks now in that area. The longer you go sideways, the more likely you are to continue the trend. I hate to say it, but we could see 11,500. That's the next weekly demand down there. Yeah, it's ugly, but I'm not willing to buy into this at all. If anything, you'd want a very short-term trade. And you can see on the daily chart just sideways back and forth between 18,950 and 22,559. So be very careful. We can't get above 50 on the RSI. That's very bearish for Bitcoin. Anyway, that's what I got for you for this week for the Wendell effect. Again, I apologize not being able to do the camera, but my voice, as you can hear, is very rough. I'm pretty rough. Just overcoming COVID. Just stay safe out there, everybody. And until next week, trade safe, trade well, and take care.